Hello, good evening, everyone. Welcome to all of you for today's session. Students, I hope all of you are doing great. So just let me know whether you people can hear me well. Tell me, please. Am I audible to you people? All right, now, so just to have an idea of my audience in the class, please select it, see the your screen. Yes, please. Just to have an idea of my audience. I need it. All right. So it is 50-50. Majority people are going to attempt it a second time, majority. But the remaining are majority are from the markets, not from my old students. Anyways, it's good to have an idea. Right. So students, the point is you have received the course resources. Okay. Here we are. I have presented it the past exam paper analysis. So basically there are 5 papers. One is ACCA specimen exam. It is present on ACC website. Then is September 2022 when this new exam started, the format started. And then later on, there is December 22 and so on. And there is a mock as well. Oh, sorry, this had to be crossed. Okay, it has nothing to do with it. Now, so students, the point is, if we analyze this past paper, we can see a few things. What is being tested on a regular basis? Audit report and review is being tested on a regular basis. It is mandatory. Completion of audit and impact on audit report. Audit report going concern. Impact on audit report. Audit report. Audit report. On a regular basis, it is being tested. Second thing which is tested, that is quality and ethical issues. Quality management and ethical issues. They are being tested on a regular basis. Here is quality. Quality. Yeah, here it was missed in this past paper. Quality and ethical issues. Here it is. Right? And the ethical issues here as well. Ethical issues here as well. So, yes. The next is, that is, risk of material misstatement or business risk. And audit risk. It is mandatory in every exam. You can see risk of material misstatement, audit risk, It is mandatory. Yes, there is another thing mandatory. You'll be surprised to know. There is 10 marks, a question normally, up to 10 marks. Which actually disturbs the peace of mind of the student. Which is unusual. For example, responsibilities regarding laws and regulation. There was another, and it is not that tricky, but something which you should impact of outsourcing on audit planning. Okay, here was report to those charged with governance. Right? Yes, it is normally, it is happening. So I'm telling you in advance, you should be ready for this part as well. And then is the audit procedures are mandatory in every question. Audit procedures, 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 and procedures. They're mandatory part of every report. In addition to this, audit evidence is sometimes they miss, sometimes they test again and again. So audit evidence is here. And as a part of forensic audit, as a part of PFI, again procedures are here, part of these questions. So audit procedures are directly or indirectly involved over there as well. I'm sorry. And you see, you pick these topics. So business risk, we can also write, very important. Business risk, because it is tested for a big mark. You know. It means these areas, if you prepare these well, and along with other assignment, your 90% paper is okay. 90% marks in your paper. And students normally come to me after every exam attempt. This semester, Hamzah, I'm not going to pass. Why? Because I missed a 10-mark part, 15 mark. And I normally ask them, you solved 85% paper. For example, I say solve 100%. I can encourage that. 85% paper, you say, I solved 15% or 10 to 15% you missed. And you are giving more weightage to this in your result rather than this. You write that, you see. So the point is, why they give more weightage to this? Because AAA is all about drafting, and drafting. Of course, it is based on some basic knowledge. If you do not prepare that knowledge, you cannot draft answer. Drafting is next level in the ladder. This is the base foundation on which that ladder basically that stands over. For example, this knowledge is very much important in the question of knowledge in the audit report. This is very much important in the question of ethics and quality. Very much important. These questions. If you do not know the basic safeguards, if you don't know the type of report, under what circumstances it has to be given, you cannot apply. Okay, now I hope it is clear. So I have given you this whole story in front of you. So there are total 2 business risks questions. And risk of misstatement questions are many. Students, I have given you this data. 5 past papers into 3 question each, 15 questions. And you have around 15 days before your exam from today onwards. Please, the blunder which I have seen with my own students, because some of them are doing assignment and solving. The problem is that I explain how to write answer, but when they are writing answer, I'm sorry to say they have traumas with their previous mindset, which are recurring to them, and when they start writing the answer, they start writing the way they wrote the previous exam or previously when they were studying. Remember, drafting is you know everything. First of all, you cannot pass paper. You cannot learn the drafting without knowledge. But if you know knowledge, you are not drafting answer the way examiner is asking you, you will not pass. I'm telling you in advance. So that's why this is the last 12, 13, 14 days, 15 days to learn about it. Now, so students, you have received these documents. I have attached 2 examiner reports, which are very much important. When you are traveling in the bus, you are at a layer, yeah. So try to read these reports. What examiner is saying. Latest examiner report, March, June 2023. Students, the point is, just 1 minute, please. Yes, there are, one more thing, I will explain it here. There are 80 technical marks and 20 professional marks. And out of 20 professional marks, if I say majority marks are linked to the when you solve question utilizing the scenario-based data, you get that. At least 50%, 10 marks, up to 10 marks. You write appropriate procedures as per scenario, 1 mark additional you get. You are discussing the ethical threat in detail, utilizing all the data, 1 mark you get. You're utilizing the calculation to evaluate audit risk, 1 mark you get. I'm just telling you. Yes, a few marks regarding that are which are ready to format, specific format, or just like that, significant risk of material missed. You have to prioritize significant risk. Now, how to prioritize? We will talk about it. We will talk about it. So few are there. In my opinion, they are around 5 marks, 5 to 7 marks. Majority are still linked to it. That's 10 to 13 marks. So that's why focus the backbone of the paper. Now, so today we are starting and we will be talking about, here we are, Yes. Analytical procedures, risk of material misstatements. Yes. Students, when we talk about analytical procedures, audit risks. So audit risk, when you are explaining, basically in exam, and we know that risk of material misstatement is part of it. There is only detection risk. Yes. Now the point is, when we talk about risk of material misstatement or as audit risk, again application. Application is important. That you have to choose the data from scenario. You have to tell what IFRS says. You have to apply that to scenario. Some accounting treatments done by the company are clearly incorrect. They're clearly incorrect. We cannot call them risk. That there is risk that may be incorrect. We will explain that they are incorrect and how they are. So apply that and justify what misstatement, understatement, overstatement of specific item may occur. This is how it has to be done. Now, so professional marks in analysis and evaluation. So significant risks, most significant. So we have to normally explain it in the conclusion. Two ways. One is that we arrange the risk in a way most significant first and the remaining later on. Remember, those risks which are related to quantify, we quantify highest amount, and non-compliance with laws and non-compliance with IFRS. Amount involved is highly material. Non-compliance with, if there is non-compliance with IFRS, they are highly significant risks. And we have to explain that in conclusion paragraph. And yes, sometimes when we say applies to the scenario, that this treatment done by management is incorrect. Management may be biased. Okay, so skepticism. Why management is biased? Because they are going to be listed. Because their bonus is attached. So, by management bias. Now, students, commercial acumen is related to audit arrangements. So, students, it is about that. Practicality of audits. I will talk about it if this is, it has not been tested yet. Now, so students, let us proceed and start doing practice on these areas afresh. Yes. Okay, one more thing. These audit risks or risk of material misstatements, of course, they're present in the exhibits. One skill is utilize all information regarding a risk spread across multiple exhibits. For example, there is some information given in the first exhibit, exhibit 1, and about the same risk, some information is given in the exhibit 3. When you utilize all information, you get professional mark. It is all information. And for that purpose, we need to plan question properly. We cannot start writing answer just reading exhibit 1. So we have to go through, analyze it properly. And the next is second. The second point is, which is related to audit risks or risk of material misstatement. That is, they are related to accounting issues, which are very much important to be discussed. Examiner loves that. They arise from general statements. It is a new audit client. It is going to be listed, right? So it arises from that as well. And you find some data from financial statement extracts too. So 3 pockets are there. So you have to find all the relevant points there. So let us start doing some question. And I'll be starting with you people. The latest available past paper on the ACCA practice platform. That is Encore company. It has 3 requirements and we will be solving all 3 today. I'll be starting with it. I'll wind it up. Then I'll move towards another question on business risk. Maybe Mercurio or this one. Okay. So this is how I'll be proceeding with it. And we will be, of course, solving audit procedure and question on ethics as well, along with it. Okay. We'll be following this approach today. Now, so ACC platform was down this morning when I was doing my P4. Oh, just a minute, please. Yes, here we are. So AAA March-June 2023 exam. Really? Just check it is working at your side, the platform. It was working in the evening before class. I checked that. Again, stuck. Just check it, please. Is it working? Check, please, other people as well. Because it is not opening the questions. Okay, just a minute, please. Just give me 1 minute only.
This is something what is happening now. Opened. Only practice being opened. Well, scenarios are being loaded or not? It is the past paper. December 2022 has been loaded. So let us start doing it. Business risk we have not discussed. Let us talk about the business risk as well first. What the business risk is all about can affect the business financially. On financial statement. It is not about impact on audits at all. The business, your examiner clearly says, is something which has yet to occur. Was hit by a storm. It is not business risk. Occurred. Risk is something uncertain which is going to happen. Of business risk. These are the words from examiner reports I have extracted. Industry specific knowledge required. Have to evaluate a business, so industry specific? No. Sufficient detail will be there. Yes. And those risks which are directly clear from the information given in scenario, consider those only. Speculate. Actually arising from scenario. Only. Important. Once. Oh.
Now, it's okay now? Just see. It's better, Waleed, now. Okay, right. So we are talking about business risk. So very important is evaluation of business risk. That you have to identify risk and illustrate the impact on the business. And very important, you have to relevant to the client in question. You have not to discuss the generic. Specific data is from scenario. This is very much important. Now, the next is scale the risks. Sometime liquidity risk is affected. The company is facing liquidity risk. Okay? As well. So this liquidity risk may become worsen if a customer is successful in a claim. against the company, and company has to pay fine. So linking the risks, this scale, this has professional marks as well. Now, if exam question says that a risk has already been mitigated, that is not a business risk. If you are repeating a data breach, it is not a risk. And some extreme outcomes, students normally do a blunder. For every point, they say company may not be a going concern. Company may lose its license. Even license is not mentioned there. You have to be prudent in your judgment and discussion. Okay. Now, so this is very much important to understand. Yes. Yes, you see here, candidates preparing the AAA exam should be mindful that evaluate risk in specific information provided in the scenario. Examiner are saying again and again in all examiner reports. And in-depth evaluation, depth, not supervision, a superficial answer. You have to tailor. Right? So if you write 10 risks and you do not tailor them properly, and on the other hand, you write 4 risks, for example, and you properly tailor, you will get more marks there. And these 10 may be crossed by examiner. So generic response, you see again and again. No generic response at all. Now, so let us proceed towards this question, which we have seen now today. Here we are. So students, you are, and it is 1st July today. Starting from here, you are an audit manager in a North End company responsible for an audit of Mercurio company, a listed company with financial year ending 30th September 20x5. Company leading specialist retailer of small domestic pets, pet foods, and pet accessories, operating 264 stores across the country. Right. So these are the exhibits available. Partner's email is first. 2, audit manager. Right. With the year end approaching. Okay. I have drafted answer. Okay. I need you to start planning the audit of Mercurio company. I met with the company's finance director, Kate Fleming, last year to discuss the recent developments. For the business, I have provided you with the summary of the matter discussed at the meeting along with some product. Based on what I have done on this, it is appropriate for overall materiality to be based on company's profit before tax. Yes. So it should be based on profit before tax. That's okay, I think. As this is a key measure for investment and provider of finance, I require you to prepare briefing note for my use, in which you evaluate business risks. Evaluate and prioritize the significant risk of material misstatement which need to be considered in our planning. 18 marks. 8 marks and 18 marks. 1 mark, which is related to professional marks, that the examiner says you have to follow the restrictions imposed by the requirement. This is restriction imposed. Please note that you should not evaluate risk related to audit of animal inventory. That will be addressed in a separate status by the audit expert. So you have not to discuss about that. One thing, you should use all exhibits when carrying out the requested risk evaluation. Discussed and conclude on the impact which outsource. Now, this is what I was saying, that a bit different question. 7 marks, we will talk about it. Design audit procedures in respect of holiday pay, 7 marks. 10 marks are for professional marks. Now, so let us start reading the information. So what I'll be doing, yes, now it's okay, I think. It's fine now. Yes, I'll be opening a Word document. Oh my God, just a minute, please. This is a Word document because I have to share answers with you. So what we need to do is, first of all, we have to create format of the question. What is the format of the question? From here. We have to write all this here. To, from, subject, date, and afterwards, introduction paragraph. Yes, 2. Now 2 will be engagement partner, Ted Hastings. From, audit manager. Now, subject, audit planning. Mercurio company. And date is the same date? No, make it 2nd day. 2nd July 20x5. At least one day will take. Just kidding. Okay, introduction paragraph is the paragraph which will describe all the requirements. All the requirements. Introduction paragraph will provide all that. So I will simply copy it from here and explain it. Our life has made easy by my own answer. Now, I need not to type everything. Just see here. The following briefing notes. The following briefing notes includes, yes, the evaluation of business risk faced by Mercurio company and the significant risk of material misstatement has been evaluated and prioritized. Moreover, the impact of outsourcing of credit control department on our audit planning has been considered, discussed, and lastly, the last point, it includes the principal audit procedures to be performed. Yes. So all the requirements. Now the next starts business risk. Next starts business risk. What the business risk is? So evaluation of business risk. Yes. A part. Okay. So we will close it. We'll start it. Reading. So Mercurio is a large listed company established 15 years. Friend, this is A part. B part is related to, yes, evaluation of risk of material misstatement. C part is related to impact of outsourcing credit control department on audit planning. And then lastly, audit procedures on holiday pay obligation. This is how 4 requirements. So now we will be analyzing the all, yes. Now, it is a large listed company established 15 years ago when the founder observed a growth in demand for pet products. The company has grown steadily and is now the largest retailer of pet products in the country with over 7,000 employees who are mainly staff working in stores, as well as selling pet-ready products for a wide variety of animals. The store also sells small animals such as rabbits and fish. Staff members are fully trained to give advice to customer on matters related to nutrition. Yes. Students, they are dealing with animals, right? Wide variety. So their staff is trained, handled in all type of, some stores sell more unusual pets such as spiders, snakes, and other reptiles and require compliance with specific import restrictions. Now, the point is here, yes, many Mercury company operates veterinary clinics within most of its stores. The veterinary clinics are staffed by fully qualified vets, offer a fully range of veterinary services. Customer can pay as they go for appointment and treat their animals, or they can take over an annual pet health care plan. Students, I will be writing now. I will be writing here. First of all, they deal in animals. Okay. So animal welfare is the first issue. The second is, so business risk is the animal welfare, that is very much important. They sell pets. Yes. The first issue. They sell pets. Now, the second issue is because there are certain laws and regulations as well. They have to apply now. So they have to comply with those laws and regulations. And then they apply the training of staff. That is the second issue. Staff is fully trained, they say, but there is might risk. Yes, they have to provide veterinary advice. Staff training is another big concern. Specialized business needs are there. I am just analyzing right now. I'm not drafting answer at all yet. Telling you how to find points, how to analyze scenario. Now, the next is clinics. Clinics, veterinary services. Right. So, and they offer healthcare plan which cover the cost of essential vaccination and quarterly health checks. The pet healthcare plans are extremely popular. So it has two business risks basically: veterinary services and healthcare plans. Veterinary services and healthcare plans. You have not to be bold, please. Stay awake. Because it happens when we do analysis initially. Now, so the next point is the cost associated with the vaccination has risen over the year. However, they are not equal to, yes, healthcare plans. Yes. This additional. This is going to be a financial issue for the company. Profitability. So, next point. Accounting policy is to recognize the revenue for sale. Now, this is revenue recognition. It is risk of material misstatement. I will copy from here because I have not to read a scenario more than once. So immediately, revenue recognition. So I will, yes, I will copy and paste all the data which is relevant here. Yes. Now, next. I'm just showing you how you have to do the analysis. So this exhibit 2 done. Nothing remains behind. Next. Selected financial statements. Revenues are increasing, profits are increasing, profit before tax, assets are increasing. Yes. It is not getting stable. Yes, now. So students, the next they are saying that total assets included in total assets are assets related to store purchase from Lake Well. Okay, Lake Well.
We will read it. To expand into new location, 20 stores were purchased from Lakewell, a clothing retailer. On 1st May, see, yes. At a cost of 171 million, Mercurio purchased the store under the cash reserve. It was facing going concern problem to offer the store for sale as part of restructuring program. The store needed to completely refit it at an estimate cost of this. The management has not yet decided how many of the store will be retained for use in business. Any which are not retained will be sold. The store will be refitted during the period November 20x5 to January. Yes. So this is risk of material misstatement, as well as it is business risk. It is expansion. They have invested a huge amount here, 171 million. So the first of all, expansion of stores. Yes, I simply copy paste it because I'm interested in identifying it. And here, yes, capitalization and recognition of stores related expenditure. Yes. Next. So, students, the next point is two, trade receivables. Receivables where the majority of the sales are for cash. The majority of they are for cash, right? An increased number of customers have credit accounts with the company offer credit 60 days. The forecast balance is 42 million, huge. Mercurio engaged Firebank, a service to provide credit control function. Now, students, credit control. So, credit control is an issue. Receivables is an issue for the company. Okay? Receivable is an issue. Now, yes, that is risk of material misstatement. Receivables is an issue. Next, goods in transit. They purchased 12 million of pet food suppliers from an inter-supplier. The sale contract stating that ownership of goods passed to Mercury date of shipping. During the ship carrying the goods was involved in an accident. Yes, it was involved in an accident. Now, the next point is, they say that which destroyed the entire supply of goods. The director have engaged insurance on the shipment of the goods, and the policy stated that 80% of goods are covered by insurance. The latest correspondence on insurance was an informal email that claim have been received and due to processed. Now, goods in transit, valuation of inventory. Yes. When they have recognized it as an asset, 12 million. Yes. So 12 million is recognized, inventory is recorded at 12 million. So the next is damaged inventory in transit. in transit. One more thing, just coming to my mind, there was a restriction regarding it. Audit of animal inventory. Okay, right. Not the good. Yes. Animal inventory, right. The next is holiday pay obligation. It is an audit risk once again. If you read it, holiday pay obligation. So it is about accounting issue. Risk of material misstatement. Yes, here we are. So the next is students. Ratios are here. Bank loan is increasing by a huge amount. Employees have increased. Okay. Now the next is cash is reduced. So these can be discussed in audit risk as well. This can be reduced, discussed. Yes. So that is we can discuss these points. Analytical review. Yes. So we can discuss all these points, ratios, profit margins, and here. Next. So this is also done. We have to come back to this if we need. Yes. Meeting notes. This year has seen a significant business development for the company. The company has started to sell products under its own brand, introducing the Mercurio range of premium pet food and accessories. The products are manufactured in another country and imported. And purchases of Mercurio brand goods are predicted to be 7 million. The range was for sale in June and was heavily promoted, having been only recently introduced. Sale of product for Mercurio range will be insignificant. However, projection, yes, or they indicate that it is expected to account for 30% of revenue in the next year. Yes. So students, they are basically import a lot foreign supplies. There is a risk involved and it will become significant. Yes. And they have, of course, cash. They have invested new funds here. So that is a business risk. Brand, Mercurio brand investment. Risks related to that. Now, business risk. Mercurio brand. Here it is. So students, the point is, we have identified all the possible points. A few left, yes. But now the point is how many points we need to write about. We have not to write everything about a requirement. We have gone through the scenario, but the point is, the requirement is there are 8 marks regarding business risk. And as per your examiner, marking scheme, there are two marks available for each business risks. So it means how many businesses we have discussed? 4 only. Not more than that. How many we have identified? So if we see 1, 2, sorry, here it is. 1, 2, 3, 4, 5. So 4 has to be discussed. Rather, here there were 2. Healthcare plan is a separate risk. Healthcare plan is a separate risk. 6 we have identified. In exam, you will never write more than 4. Remember that. Analysis done. Start writing about 4 only. Yes, please. You want to ask some question. Ask, please.
Sorry, what? Each time there will be business risk and audit risk questions. That is, it will be allocated 2 marks per point. That will have to explain.
It is about business risk.
Only business risk. Okay.
Yes, only business risk. It is 2 marks per point. Properly discussed. Right? Audit risk I will come when I will start discussing about that. Now, let us talk about audit risk now. Let us talk about. Audit risk is normally, they are on average, or risk of material misstatement. Here it is. They are on average 3 marks. Each point. But remember, when you are discussing ratios, trends, just like that, you say cost of sale has reduced, and you're discussing that, you have to bear that in your mind. That is a half mark is for calculation. Okay. And normally 3 marks are available for trends, calculations, along with properly explained risks. Now, you see here, I will explain it. You are discussing gross profit margin, liquidity issue. Okay, so ratio you calculate it and discussed. Each ratio have 1 mark along with discussion. So 3 marks maximum. You discuss 4, 5, 6, 7 ratios, but you will not get more than 3 marks for it. Normally it is like this, on average. Next. So materiality calculation, discussion, and justification. Which this question start with materiality calculation. Calculation and discussion at the start of question of audit risk or risk of material misstatement. It has how many marks? 3 marks. 3 marks. Now you see here, if the question is 18 marks, for example, this requirement is, which we were doing, where it has gone. Yes. It is 18 marks. So you deduct 3 marks of materiality. Remaining are 15. Now, out of 15, if you discuss 3 marks, ratios and risk, remaining are 12. Now, 12 marks, you have to discuss 4 accounting issues. I suggest to you, your preference should be accounting issues, IFRS related risk. Other risks should also be there. They can, but they normally 2 marks on average. For example, new audit client, outsourced department of the company, like this. Okay, now. So you see, if you move with this mindset, paper will be easy for you. You know what you are doing. And now let me check whether we have identified 4 risk of administration: revenue recognition, capitalization, receivable, inventory. 5 we have identified, and I think 6. Much more than needed in exam answer. I hope this is clear, what I'm trying to explain. I hope it is clear. Now, let us start writing answer on the business risk. First of all, anyone, any questions so far before I proceed further? Is that clear?
Yes.
Okay, now. So students, the company sells basically wide variety of animals, and there are animal cell related standards which should be maintained. For example, you say, I'm not able to understand what Mr. Hamzah is saying. I cannot think of it. Okay, leave it. Do not write about it. There are these points are directly available. These 4 points, you have to write 4 only. Rather, 5 points are given in the scenario. I delete it. Okay, I will leave it. Done. Right. So staff training is an issue. It is a big issue. So staff has to handle, they have to deal with the animals. They have to provide advice to the people. Right? So, first of all, staff members of Mercurio Company provide advice to the customers related to nutrition and journal element. Yes. Health. One thing. Health. They should be qualified and experienced enough to be qualified, experienced, and trained enough to deal with these tricky aspects, yes, or technical aspects, not tricky, technical. aspects of services company is offering of company, so that they can provide a sound advice. Sound advice. Otherwise, there is risk that in case of any inappropriate advice provision may result in reputation damage of the business. Reputation damage of the business, leading to loss of customers. Moreover, if the animals of customers, now this is what I'm writing, listen, this is commercial acumen. That advice, what will happen? Customers are harmed by the wrong advice. It may result in claims, legal claims. Yes. Against the company. Simple as that. So training is very much important. Now, since, moreover, second part of the same explanation, which is linked to it, training, since the company handles special pets like reptiles, etc., staff members should be sufficiently trained to handle these pets properly. Snakes were also there? I forgot. Anyways, okay, leave it. Enough. These pets properly. Otherwise, it may cause injuries to themselves, or otherwise there is risk that it may cause injuries to themselves or to the customers as well. Enough. You see here, I have not explained any rocket science here. I'm not an expert of animal handling. I have written what is given in the scenario. I've explained that. Simple as that. Now, The next is veterinary services. Company also provide veterinary services, clinics. They have clinics. So now we can write easily about it. How to write? If we have discussed this. So approved clinics. Right. So there is risk that. So now the point is, the risk is that pets may not be treated well during such health care service provision, either because of unqualified staff, unqualified or untrained or poor trained, or not, yes, staff, or vets are not properly trained. And animals and may get harmed by poor medical treatment.
Now, can you hear me? Can you hear me?
Yes.
Yes. It may be inappropriate not well cleaned causing health issues to the pets being treated. Yes, to the pets to be treated, being treated. And it may result in reputational damage as well as legal consequences for the company. Now it is also done. So 2 points, they were almost the similar discussion. Now healthcare plans. Third point. They are offering the healthcare plans. They're popular. Yes. Value for the customer. But there is risk that these plans may not be financially beneficial for the company business. Rather, may be a cost burden for it, as cost, now justification, cost of the vaccination has increased. Yes. Now, students, these healthcare plans may be a way to retain and attract customers. At affordable, at attractive prices. One fact, right? But and to make profit on other products sale to the customers. But still, there is risk that if additional revenue is not generated by selling other products and services to the customers, these plans may actually be a burden and causing a decrease in net profit of the company. Yes. A normal student, normally, what happens? They may not think about it. This statement, it is commercial acumen. They may not think about it. So that normal student
not normal, average student, right? A good student will think about it and get this one additional mark, professional mark for writing this one sentence. Next. The next is expansion of store. By the way, 4 points, no, 3 done. 1, 2, 3. Yes. Expansion of the stores. They have purchased stores, 20 stores from Lake Wall. And they have spent a significant amount. There is a refitting cost of how much? Refitting cost 9 million each. 20 into 9, 180 million. Right? Company's already cash balance is 36 million. We have seen that. So it may not, if the company does not have money, it may not be able to refit all these. Yes. And if they do not refit it, they have to resell them. They have to resell them. Right? And in such a situation where they are not in a good situation, they are good, they have to be refitted. Company may not be able to recover their money. Right? So loss. So you see here, purchased, clothing retailer. Yes. The cost of refitting these stores is more than purchase price. That is 20 into 9 million. 180 million. And company cannot finance these refitting with its available cash resources, which are only 36 million currently. Yes. Which cover the refitting cost of 4 stores only. But again, company needs some cash for operations. It cannot spend the full amount here. Yes. It cannot spend full amount of cash on refitting. Yes.
So it needs long-term funds for this purpose. Maybe in the form of loan. If such an amount is not raised, the project needs to be stopped. And significant investment will be trapped. Will be trapped in that case. Now, students, so investment trapped. A cost to the company. Yes. This cost to the opportunity cost of funds, financing cost of funds. They're not utilizing that. And for the stores, they are to sell. Somebody may have to retain some and some has to be sold. So, are to sell, Mercurio company may find it difficult to sell at good price due to the fact they are not in good state and condition. Yes, done. So this is a business risk. So yes, at good price. Of course, it is a loss we are discussing. Next, Mercurio brand. So I will not be typing about it. I'm just explaining to you. I can explain it to you that what is the issue with this brand. Students, they are going to, very easy point by the way, it is very easy point. You can discuss it. The products under its brands, manufactured in other country, purchased from foreign suppliers. Okay. So when everything is imported, there might be two issues. The one, due to any issue, supply can be halted. And they may not continue with the supply. 1 point. And may not fulfill customers' demand timely. Second, the second risk is that they are involved in the foreign currency because they're importing all the things. And foreign exchange risk is there. A movement in exchange rate may cause their price to go high. And now, then,
So students, so these are the risks you can discuss. Two risks, 2.2 marks you will get. And of course, it may be profitable, and they may not be able to raise price due to competitive market. So loss, so enough. So 4 points are done. 4 points are done. The next point is, yes, risk of material misstatement. Student, I will take a 5 minutes break. Not a big break, yes, only 5 minutes. Just take some deep breaths, right? Be back, and I will be continuing with this evaluation of business risk. Just 5 minutes.
Yes, students, now the next is evaluation of risk of material misstatement. So the first thing is materiality. And in the question requirement, they told us in the exhibit 1, they tell here always here that how to calculate materiality. Here they said the materiality to be based on company's profit before tax. So we will start discussing it. So materiality. Yes, for the purpose of planning the audit of Mercurio company, materiality is based on materiality is based on profit before tax of the company. One thing. Benchmarks. We have to mention benchmarks. That is, now you should memorize benchmarks. There are 3 benchmarks. Profit on the basis of profit, 5 to 10% of profit. For sales, 0.5% to 1% of sales. For assets, 1 to 2% of assets. 1 to, so here 5% to 10% of profit before tax. Now, 5 to 10% of profit for tax. At 5%, the benchmark is now we have to check the profit before tax, how much it is for this company. Yes, here we are. 60 million. So 5% is 3 million and 10% is 6 million. It is 3 million and at 10% it is 6 million. Upper benchmark, upper limit. Really?
Now, student, the hearing issue. How many of you unable to hear me? Tell me, please. Can you hear me? So dear, the problem is at your side then. Check your device and connection. Now, thank you, everyone. Students, when you write this, now, 1 benchmark, 1 mark. Yes, you just check your, please, device and join in audio. Just check that. So now calculation, and the next is justification. Next is justification. Just check your device, dear. Majority are able to hear. Now, Student, now choice. That which one benchmark we have to choose. Your examiner says you have to give logic. You have to justify. And there cannot be any one good answer. Mr. A, B, C, D, 4% are given different logic, and all 4 can get marks. Mr. A is choosing this benchmark, 3 million, and he is sharing logic against this, regarding it. The other is giving this logic regarding it. Both may be correct, and both can get marks. Now, so, for example, Mercurio company, I am writing 2 different answers here. An existing audit client because they have been auditing before. It is not a new audit client. They have been auditing it since long. Yes. Yes. It is not a new audit client. Is this an audit client? And auditor, what is the name of auditor? Whatever it is, has enough detailed knowledge regarding its business operations and affairs related to its financial statements. So, at planning stage, the materiality is set at higher benchmark of 6 million. Correct, 1 mark given. But another person, another student write answer differently. He sees that there has been significant changes in the business of company. They have invested in lake wall properties. A new brand has been launched. So there are therefore high risk of material misstatements in its financial statements. So materiality is set to the lower threshold at 3 million. Both are okay. By the way, I like the second option better. Yes. I will write this if I write the answer. Yes. So I wrote both types of answer because it is more linked to the scenario. It gives a good impression to the examiner. Here you will get the mark, even you write the first one. Now, next. Revenue recognition. Now, students, we can discuss the points, but we have to then prioritize as well. Because prioritizing the risk as well. Which of the amount, now, you see here, it is 10%, healthcare is 10% of revenue. They said that. Healthcare earning is 10% of revenue. I'm just telling you significant risks. Just see, it is 171 million amount involved. Okay. Then receivable balance is 42 million. Damaged inventory in transit is 12 million. Yes. Holiday pay obligation, how much it was? We need to check that. The amount. Yes. 21.1 million. So 21.1 million. Yeah, sorry, here it is. It is given here. Now, we can arrange them in the order of amount. What is the revenue of the company? Total revenue. The revenue is 803. So 10% of revenue is 80. 10% of revenue is 80. So you see here, the first should be this now 171 million. Prioritization. Here. It should be discussed first. Professional marks, I'm saying. Revenue should come second. Then afterwards, it is the receivable balance. Okay. We can see whether we have to discuss it or not. So because we need only 4 points. Yes. Holiday pay obligation. That is 21. You pick it from here. Simple as that. Now the order has been fixed. Yes. 1, 2, 3, 4. By the way, there can be certain points where more than 3 marks are available, where more than one aspect can be discussed from the scenario about an issue. Next. So capitalization of recognition of that asset. So first of all, we will be discussing the materiality of the issue. Now, so in my opinion, this point has more than 3 marks. In my opinion, these have more than 3 marks. It should be around 4 to 5 marks. Yes. So let us discuss it. Why? And I will prove it how it is of 4 marks at least. So starting with the new stores purchased by the company are material to, are having value much higher than materiality threshold. Threshold. So they are material to its financial statements. Now, students, now the point is, there are two types of properties. One is the properties just a minute, please. The properties which will be refitted should be classified as property, plant, and equipment under IAS 16. 16. As they will be in the use of company, business. The risk is that these properties may not have been classified as property, plant, equipment, and these assets may be misclassified and misstated. Possibility is there. So which are refitted, they should be classified. Now, remaining. The remaining properties which they have to sell. So as per IFRS 15, the properties which company is committed to sell and sale is highly probable in next 12 months, should be classified as held for sale. Held for sale. Now, so students, and should be given should be disclosed separately on face of financial statements as held for sale, as assets held for sale. Yes. So the risk is that now applying to the scenario, since the company, Mercurio company, now applying to scenario, is intending to sell the properties. Five typing error. IFRS 5. Thank you. So, since the company is intending to sell the properties, which not properties which are not to be refitted. So it is likely to meet criteria for IFRS 5. Now, so the risk is that the company, yes, and the risk is that the company may not have classified the asset, the stores to be sold as held for sale, even they meet the criteria, resulting in incorrect classification and misstatement of assets. The next, so it is done. So it is for 3 marks. A good question it is. You see, this application, yes, and this which should be refitted. So applying to that. Now the next is revenue recognition. The company's accounting policy is to recognize customers. I think copy, I have unable to copy. Just a minute. There is something missing. Let me get back to the question. Yes. Okay. Company's policy is, yes, here is, which is missed actually. This is the full sentence, which was not copied here. Yeah, this is the full sentence. Students, recognition. Yes. So students, the 10%, the healthcare, the revenue from healthcare plans is 10% of overall revenue of company historically. And on this basis, it accounts for, it is how much? Yes, it is, yeah, 80.3 million, 10% of this year revenue. It is 80.3 million of revenue for the year. It is 80.3 million of revenue for the year and is material and is much higher than materiality threshold and hence material to financial statements of company. Yes. Next. Now, students, the point is, as per IFRS 15, revenue recognition, revenue should be recognized when performance obligation satisfied. Yes. Here, in the case of healthcare plan, now applying to scenario, performance obligation is satisfied in the form of quarterly checkups. Health checks. Quarterly health checks. So, performance. So, revenue related to the health care plan should be recognized systematically along with health checks over the year. Yes, how it should be recorded. But the Mercurio company recognizes revenue on the date, yes, when healthcare plan commences. So which seems to be incorrect. And due to this, deferred income, due to this, there is, due to this, deferred income is understated and what is overstated? Yeah, deferred income, a liability, is understated and revenues are overstated. Now, this 3 marks discussion is done. Now, student, there is further point. Students, company is expanding, new store, right? Like we discussed above now. So there is risk of management bias to overstate revenues to show boosted performance of company as company has made investments in properties and brand. There is, yeah, you see, this is called basically linking. Now, so management, yes, may, yes, be tempted to overstate, yes, to record revenues of healthcare plan too early to achieve, to achieve that objectives. Enough. Now, receivables point, I will be discussing with the other, I will leave it for the time being. I will come back to it with the other analyticals, and I will be discussing it here, analytical review, along with the receivables. Okay, in a few minutes. Let me discuss the other points first. This holiday pay obligation. Students, read it a bit. Student, very easy point it is. M has an internal who has testing the control in the payroll system. Okay. Two different system. Okay. By the way, this is again a risk of material misstatement. Additionally, the internal procedure has followed while the system have been capable recording holiday taken by staff. This is not always used, and manuals record are also maintained. Employees are entitled to carry forward a three. This is the rule of the company. Management estimate and holiday pay obligation relating to unused holiday entitlement, previous year obligation, and adjusting it for pay rise and changes in staff. The holiday pay obligation forecast is this, students. The holiday pay obligation. What is the first thing? Never get lost. First thing is materiality. Obligation forecasted for the year is 21.1 million and is much higher than materiality level. So it is material to finance statements of the company. First of all, students, first of all, listen, holiday obligation has increased by how much? 21.1 divided by 11.6. It has increased by 61%. Now, it's okay? Tell me now.
Okay, welcome. An increase of how much employees increased? %12.9% in workforce. Yes. So it is disproportionate increase in holiday pay obligation, as previous year holiday pay obligation per person was how much? We can calculate. Increase. Now, you see here, how to calculate? 11.6 million divided by 6,200. 11.9 million, 6,200. It is $19. And this year it is 21.1 million. 7,000. It is 3,014. A huge increase. A huge increase. So it is likely to be overstated. This obligation is a management estimate. Management estimate and is calculated based on staff members, rates of pay. Yes. And changes in this data. Based on that. Now, and student, they said there is rather lack of control. So there is, so there is a high risk that incorrect judgment may have been applied by management, and it may be an holiday pay obligation, may be overstated, not yet completed. In my opinion, it should have 4 marks minimum. Okay, because there is some discussion of now. That which is related to IFRS as well. As per IS 19 employees benefit, an obligation related to holiday pay can be recognized in relation to the paid absences. Yes. Yes. Paid absences which are accumulating only. And here, employees can, now applying to scenario, carry forward only 3. You see, 3 of 3 holidays for this purpose. For this purpose. Yes. So the risk is that. Management may have carried forwarded all the paid absences. Yes. Because of which holiday pay obligation is overstated. Now, done. My typos. Now, so students, how many points have been done? Capitalization, revenue recognition, and holiday pay. Now, damaged inventory in transit. Now, so students, read it carefully. They say that in June 20X5, Mercury purchased 12 million of pet food supplies from an international supplier, which with the sale contract stating that ownership of goods passed to Mercurio at the date of shipping. During transit, the ship carrying the goods was involved in an accident which destroyed the entire supply of goods. Mercurio Company's directors have arranged insurance on that. Have stated that 80% of the goods destroyed are covered by the insurance. The latest correspondence from the insurance company was an informal email that claim has been received and was due to be processed. These purchases are made in Mercurio Company's operating currency. Now, how to discuss it. How to discuss it. So then, first of all, when we are bombarded with information, we are lost. Immediate recall, materiality. First thing is materiality. So the amount of lost shipment is 12 million higher than materiality threshold. So it is material to financial statements of Mercurio Company. Now, as per the purchase contract with supplier, goods past, the ownership of goods past, yes, to the Mercurio at the time of date of shipping. Okay, now, so title has, yes, title has been passed, ownership transferred. So loss of goods should be recorded in the financial statement of the Mercurio company. Yes, but it is still held at 12 million in its financial statements, which is incorrect. Incorrect. And inventory is overstated, and inventory and profits are both. Of company are overstated. Next, student, what else? The next is insurance, which is a part of the same point. Insurance company has not communicated. Yes. They say 80% of the loss is covered, as the company has informally received a confirmation from insurance company that 80% of the loss is covered for a value of 80% of 12, 9.6 million. Yes, and claim is being processed. Is processed. Now, students, as per IAS 37, as per IAS 37, contingent asset cannot be recognized rather they are just disclosed in notes to financial statements. And an asset can be recognized if cash flow is virtually certain to be received. To be received. Yes. here, since here is no formal communication of recovery of the loss by insurance. So it is now this line I'm writing. This is application of scenario of IFRS on scenario. So it is not virtually certain to be received. So it is not virtually certain to be received. So it is not virtually certain to be received. So it should not be recognized as asset. Now, what is the risk? The risk is that proper disclosure of the insurance claim may not have been given, or incorrect treatment may have been done for the claim, because we have not been given full financial statements. Extracts is given, resulting in misstatement of assets or incorrect disclosures of financial statements. Now, students, conclusion paragraph is there, because where we have to discuss the priority. Conclusion paragraph. Now, the risk of material misstatements have been ordered as per the amount of any misstatement and likelihood of occurrence. Yes, the purchase of stores have the highest value exposed to risk of material misstatement, followed by revenue recognition of health care plan, stands at second as per the risk of misstatement. Material misstatements as per the amount exposed to. the risk of material misstatement. Now, and then afterwards, further. Yes. And remaining risks similarly carrying lower amounts are outlined and discussed above. So first two we discussed how this is how you have to do. Now, second. Students, we have not discussed the, number of points because our task is over. We have discussed enough points. 4 points were required. We have discussed that. This I have not done yet. Yes, because we have to proceed with the next part. We have to complete this question today itself. Okay. And it is a big achievement if we do this. Now, so the impact of outsourcing credit control department on audit planning. Now, when this is given in my notes, volume 2, outsourcing an organization. If an organization has outsourced a department, what will be the impact? Now, impact on audit planning. So let us start with it. So no, it is C. Yes. Students, when an audit client has outsourced any of its department affecting the financial statements of the company to be audited by the auditor, So during its, just one thing, I need to check one thing only on audit planning, right? During its planning of audit, auditor needs to obtain the understanding of contract between the client and its service organization to understand, to evaluate, what they have to evaluate. The nature of services being provided. its impact on financial statements of company and any likely risk of material misstatements in financial statements. Now, credit control, they say. So here, the auditor should understand. Now, what is the credit control function? Yes. The information is given. Where is the credit control information? Yes, here it is. Engage fair bank company. Fair bank company. So understand the details of the work being performed by fair bank company that whether they have to just collect the amount from customers or have to advise regarding provision for doubtful debts and bad debts to be recorded in financial statements. Yes. They have to do that. And for this purpose, auditor will review the contract between the company, Mercurio company, and fair bank company. Moreover, any correspondence between the two will also be reviewed to understand the extent of services being provided by the service organization. Now, auditor can contact fair bank company through Mercurio company. Yes, that not directly. To get more information, specifically affecting financial statements. Right? And can obtain type 1 report or type 2 report. Now you must be wondering, what is this? By the way, your examiner assumes that you have previous knowledge of F8. It was in F8. Although I haven't put in my notes too, regular notes. This topic is there. Type 2 reports regarding controls of the service organization. Now, students, in addition to this, auditor can get more information from management and other sources regarding the Fairbank company. Fairbank, to assess the quality of work performed by them. By them. To assess risk, the purpose is to assess risk of material misstatement in financial statements. Done. Yes. It is done. Now, students, is there any confusion you can ask? Let us proceed further. There is 1 mark per valid point. Good question. I appreciate. 1 mark per valid point you make properly. So there are 7 marks, so 7 points you make. Okay? Right? Next, the audit procedures. So the next is audit procedures. That is holiday pay obligation. Now, yes. Students, we know that it depends upon number of staff, pay rise. Yes, so 7 marks. It is a tough question on procedure, I'm telling you. Okay, but we will write. Don't you worry. Don't you worry. Holiday pay obligation is here. Detail is here. Now, so D part, audit procedures on holiday pay obligation. Yes. First, obtain the management calculation or calculations or schedule showing holiday pay, schedule for holiday pay obligation, and review it for arithmetical accuracy. Yes, discuss the methods and assumptions used for it in its calculation. Discuss with the management. The methods and assumptions used in calculations. To us, yes, to assess the validity of those assumptions and methods. Next. Next. The next point is students, verify the number of staff members used in calculation of holiday pay from the payroll record of company. Yes. Verify it is the same or not. Now, verify the changes in pay and staff numbers from HR, human resource department, and review management calculations. Whether accurate estimates have been used for the same. Yes. 4 procedures are done. Next. Students, develop an auditor's estimate based on the information obtained and compare with management's estimate of holiday obligation if there is significant difference. Just inquire, yes, investigate why there is difference. Now, compare current year management's estimate with the last year. Estimates breakups. Yes. What was the calculation last year? This is too much increase. And if there is unusual change, discuss the reason with management. Why certain item has not been included or a certain exception item has been included. Now, 6, and the last procedure. Obtain a written representation from management regarding accuracy of assumptions and methods used in estimation of holiday pay. Yes. Students, it is done. This was tough. I know it was a tough question on procedures. It happens. Examiner gives 1 or 2 such parts as well. But you see here, I have not written any much technical procedure. They're easy. Now it is done. Students, let us proceed further. I'm happy it is done. Yes. Mercurio company. A wonderful question it was. Now, what I'll be doing more? We have time. How much? We have 40 minutes. We can do a small question. We can discuss that. Let us go to the Marlowe's company. I will see if we can do this. Same past paper. Marlowe's company. Actually, we have already written enough points. Okay, we've already written enough points required for the number of marks. That's why I didn't do that. Yes, here we are. Same past paper, Marlowe's company. It is 1st July 20x5. You are a manager responsible for the audit of Marlowe's company, and you are completing the audit of financial statement for the year ended 31st March 20x5. Marlowe's is a listed company. Right. Requirement. Evaluate the matter to be considered on completion. Oh, we cannot do this. It is a big question. Evidence we have to discuss. Okay, let us try to discuss what can we discuss maximum. So evidence. A good question. It is tested in exam as well. So this is the question on evidence. Yeah, it is mentioned here. Right. So 9 marks and 7 marks. Matters to be considered. And audit evidence you expect to find. Audit evidence. What is the difference between procedure and evidence? Majority of you know. Some of you may not know that yet. Procedure is something which has to be performed. My notes. Where are my notes? Just a minute. Let me open my notes. Yeah, audit evidence versus procedures. Yes. Audit procedure versus evidence. Procedure is an action to be performed. It is an order. Do this. It is a plan which is being given, order being given to the junior. Do this. It is result of the action. It is present in file, proof of audit work. Some document, some calculation, some discussion notes, something like that. Evidence is that. So you see here, procedures. There's a review the board minutes. He has reviewed. Now get that copy of that and kept that in the audit file. When we say review board minutes, it is procedure. When board minutes copy is present in audit file, that is evidence. Discuss with management this issue. He has discussed and wrote the notes. Discussion notes in the file is the evidence. Review fixed asset register. Fixed asset register extracts, which is present in the file. So you see here, I have given this example. Discuss the accounting treatment with management and confirm that adjustment will be made to recognize share as fair value Now, students, this is discuss. I'm asking my team member do this. He goes, he does that, he note down whatever he discusses in the file. Now I want to review his file. What should be present in the file? Discussion notes in the management. And confirmation that will be made. It should be present in the file. Review the notes to financial statements. I'm asking him, the disclosure is sufficient to comply with the IFRS 9? I'm asking him, he will do, he will perform, and copy and paste it. He will extract of a statement, disclosure, with the evidence that they comply with the IFRS 9. Next. Recalculate the impairment for goodwill to confirm it is accurately recorded. So recalculate. So calculation done by the team member, it will be present in evidence file. Review market research report to verify commercial feasibility of product being developed. So copy of market research report, review to verify. My again typing errors are here as well. Commercial feasibility of product being developed. It should be present in the file. Compare current year provision with the last year. If there is unusual difference, investigate comparison results of provisions with the last year and details of any investigation done for unusual difference. So you see here. These are the difference between the both. So matters to be considered. Matters to be considered. The next is the first, you see the part, one part is here. Comment, evaluate the matters to be considered. So matter is, again, if it is accounting issue, materiality, treatment, what IFRS says, what they have done, incorrect, correct, or what is that? And whether it is misstatement or not. Applying to the scenario. The first part is this. Comment on the matters to be considered. And then evidence. The next part is evidence. Now, so we will be proceeding and talking about it. One part we can do. Yes, and we will be able to complete it tomorrow. This question. Yes. The draft file statement recognizes total assets of 118 million. Student, read it please carefully. Read it please carefully. Yes. Then I will solve it. Take 2 minutes. Read it.
Now, students, the draft financial statement recognized total asset of 118 million and profit before tax of 11.5 million. Materiality has been set for the audit at $1.1 million. New property lease. Marlowe's, so materiality level is here. You can see they have given us, right? Next, Marlowe's company expanded operations during the year, and as part of this process, arranged on 1st April 2024 a new property lease. The lease contract is for 7 years with a rent-free period of 12 months followed by 6 annual rent payments. Okay, rent-free period is 12 months. 6 annual. The contract meets IFRS 16 lease criteria to be classified as a lease. The finance will recognize the right of use as 28.9 million. And a corresponding liability of same amount which has been correctly calculated at the effective interest rate implicit in the lease agreement. Management has not charged the depreciation on the right of use of assets, stating that the rent-free period should not result in an expense being included in the statement of profit and loss. Really? Management proposes to, this is yes, to begin depreciation right of use asset in the next financial period and will depreciate over 6 years for which they make payment. The finance cost has been correctly accounted for. Okay, now, so comment on the matters to be considered. So, I will be Marlowe's company. Oh, yes. So, it is Marlowe's company question. The first is lease and matters to be considered. Yes, matters to be considered. So matters to be considered are first of all, the right of use asset has value much higher than materiality threshold of 1.1 million. So it is material. As per IFRS 16, a lease liability should be recognized at the present value of lease payments. I'm sorry. Payments to be made. Present value on inception of lease. Yes. Of lease payment to be made. Discounted at the interest rate implicit in the lease. So they have done the same. So we have done the same in the lease agreement. Yes.
In the case of Marlowe's company, lease liability seem to have been recorded at correct amount. As per this criteria. Next, students, as per IFRS 16, again, right of use asset should be measured at lease liability plus any payment already made. Made for the asset. For the asset plus any restoration, any site restoration costs and any direct cost involved. No, it is similar like IS 16, site restoration cost at the end of the asset that is capitalized, we know that. Moreover, the right of use asset is depreciated over the term of lease. Here, term of lease is 7 years, with first year as rent-free, followed by 6-year payments with payment of rentals. Yes. Now, the company has not recorded any depreciation. I'm sorry, for rent-free year, which is incorrect. Depreciation of right of use assets. Asset. As depreciation should be charged as entity has the asset in use, irrespective of the fact, the timing, irrespective of the timing of payment of lease rental. Yes. Now, so depreciation charge is understated by how much is the value of that asset? 28.9. 28.9 divided by 7 years. Yes. That is equal to 4.1 million, which is higher than materiality threshold. This is also higher than materiality threshold. Yes. And hence, non-current assets and profits are overstated and expenses understated. Comment on the matters to be. It is similar like risk of material misstatement. You can see we have not done anything different here. Similar like that, if it is tested. Similar to that. Yes. Next, no evidence you expect to find. Evidence you expect to find. Now, the point is how many evidences? How many marks it be? 9 marks, what I remember. Yes. So 4.5 each. Okay. 4.5 each part. So I say, okay, 5 evidences maximum. Yes. Now, 5 marks mean 5 evidences. Now you see here, I will write evidences about it. So, first of all, they purchase lease agreement. So copy of lease agreement reviewed to confirm the lease period and details of lease payments to be made. Yes. First of all, yes, copy of management's calculation of lease liability and right of use asset reviewed to confirm the arithmetical accuracy. of the same. Management's calculations. Yes. Non-current asset register extracts reviewed and matched with corresponding lease liability recorded by company to verify same amount, yes, verify correct amounts have been recorded. Yes, we check both sources. What was recorded in the non-current asset register and what was recorded in the lease liability. Yes. Now, students, physical inspection as well. Yes, because they say property. Yes. Physical inspection of the property to confirm its existence and that it is in the use of Marlowe's company. Existence. Physical inspection evidence. Yes, and it should be written, details means should be mentioned. Yes. Now, next. Students, discussion, notes with management regarding incorrect treatment of depreciation and a request made to record, yes, an amendment entry for the same. Yes, talk to them. Discussion notes. We have talked to that. Yes. Copy of financial statement disclosures reviewed regarding the leased asset, yes, the lease to verify they are as per IFRS and laws and regulations. Done. 6 have been done. 6 have been done. Students, I will complete this question by tomorrow. Yes, inventory and reporting as well. And then what I'm thinking that I will complete this past paper first tomorrow. If we have time, we'll move to the next past paper then, which is the latest one. Okay, so this is how we will proceed. So all the areas being covered holistically in this way. Okay, so thank you for joining me. See you tomorrow. Take care. Yes. Take care. Goodbye. Same time. You should be with us today. Same time. Yes, we have class as this same time, 4 classes we have. Okay. Take care. Goodbye.